Our first closing entry was a debit to sales revenue to fully put the credit balance into the income summary holding tank. Note that after this entry, the sales revenue account on Jim ledger is a zero balance. The income summary account now has a credit balance of $15,500. So our next step here is to close our service revenue account. So we're going to do that down here. Once again, start by writing the date, then debiting the service revenue account for the full amount that currently sits in the account, $19,500. And we're going to add it all to income summary. And again, a brief description to close out the service revenue account. So to fill in this next question, after making the closing entry, the service revenue account now has a zero balance as everything has been transferred to income summary. And the income summary account now has both sales revenue and service revenue in it, both credit balances. So we add that up. It's a $35,000 credit balance. Now we are going to close Jim's expenses. The Jim incurred the following expenses during quarter three. So we had salary expense of $10,000, rent expense $8,000, utilities $2,000, depreciation $2,000, and maintenance $3,000. Our total expenses are $25,000. Keeping in mind that expense accounts have debit balances, let's make closing journal entries for the above. So here we are. We're going to do the exact same thing as we did with revenues. The only difference will be that income summary will now have debit balances added to it. So the first one we will close will be salary expense. We're going to go straight down the list. So we're going to debit income summary for $10,000, and we will be crediting salary expense for the same amount. Brief description. To close out the salary expense account. Moving right along to the next expense account, we will have rent expense. As you can see, this is a highly repetitive process. which will be highly useful on your exam, since doing the same action over and over will get you marks every time. So it's worth your while to know this. To close out the rent expense account. The next one we will close will be utilities expense. And to bring it to a zero balance, we will debit income summary and credit utilities expense for the full amount which currently sits in the account. Brief description, like always, to close out the utilities expense account. A couple more to close here. We now have depreciation expense, $2,000 again. And a brief description. And here we go with our last one, maintenance expense. Once again, debit income summary for the full amount of the expense account. This will be $3,000, and I'll scroll up just a little bit to add a brief description. To close out the maintenance expense account. Okay, so we're going to see something interesting happen here as I fill in this last little question before I end the video. The income summary account now has, so we saw that before we added in all our expenses, we had a $35,000 credit balance just from the revenues being closed into the holding tank. Now we've added 25,000 of debits thanks to all the expenses. So we're going to end up with a $10,000 credit balance left over. And what that is, it's the company's net income sitting in the income summary account for a very brief period of time. A note here, contra accounts, example, sales return allowances and sales discounts, also close into income summary. As with the other entries, we debit or credit the account to bring it to a zero balance. So typically with these two, there will be debit accounts, contra to sales revenue. So we will credit them, put them into income summary and bring them to a zero balance. So you'll see more of these accounts in the next chapter. That's something to keep in mind. You also close these accounts into income summary, much like you've closed all these expenses, which are also debit balances. Jim, Q3 net income, is now in the income summary account, albeit temporarily. We will now make a journal entry to close out income summary into the capital account, which is called Jim, capital. So I'll let you have a crack at this. We will cover this in the next video. Also have a look at the next couple of journal entries. One will be an owner's withdrawal for half of the quarterly income. So Jim will withdraw half of what he's earned in the quarter for his personal use. And then there will be a closing of the withdrawals account. So have a look at all three of those, and then we will cover those in the next video.